Greetings and welcome to the CCOF Foundation webinar on accessing crop insurance for organic and diversified farms. First off, I wanted to thank the USDA Risk Management Agency for funding this webinar. This is a second webinar in a four-part series on farm risk management supported by RMA. Additional webinars in this series include webinars on financial planning and organic record keeping. I also wanted to note that any opinions, findings, conclusions, or recommendations expressed in this webinar are those of the authors and do not necessarily reflect the view of the U.S. Department of Agriculture. If you're having difficulties connecting to the webinar, if you can't hear or can't see, please call our office for support at 831-423-2263. Press 0 for the operator, and someone can help you connect to the webinar. My name is Megan Donovan, and I will be your host today. I am a program specialist at the CCOF Foundation. The CCOF Foundation advances organic agriculture for a healthy world through education and hardship grants, technical assistance, and consumer education. My colleague, Nathan Weller, the Grants and Programs Manager at California FarmLink, is joining me today as co-host. He'll be starting off today's presentation by providing a little context as to how crop insurance fits into the broader picture of managing risk on farms. We are also very excited to have Catharine Anderson from the USDA Risk Management Agency and Vivian Soffa from the USDA Farm Service Agency presenting today. We're also happy to announce that Freeman Barsati of KP Organic and Farm Fresh to You will be joining us as well to give some farmer insight into applying for crop insurance. Before we get started with our first speaker, I wanted to let you know how you can participate in today's web event. You're looking at an example of the GoToWebinar attendee interface, which is made up of two parts. The viewer window on the left, which allows you to see everything the presenter will share on their screen, and the control panel on the right. Within the control panel is how you can participate in today's event, so let's look at that. By clicking the orange arrow, you can open and close your control panel. From the View menu, you can also set the control panel not to auto-hide when inactive if you prefer to always keep it open. The audio pane provides audio information. By default, you have joined the webinar via mic and speakers. If you prefer, you can join the audio via telephone by selecting phone call, and the dial-in information will be displayed. During the presentation, you can send questions to our webinar staff through the questions pane. Simply type in your question and click send. After each presenter, we will stop for questions from the audience. As a final reminder, today's webinar is being recorded and everyone will receive an email with a link to view a recording of today's event along with a PDF of PowerPoint slides. So I wanted to encourage you to test out the questions pane. Let us know where you're calling in from today and what you produce. And just to let you know, we have a nice crowd out in the audience, which is great. And we're going to try to get to as many questions and comments as possible. And we just wanted to apologize in advance if we can't get to your specific question, but encourage you to follow up with us after the webinar and we'll help you find the information you need. So thanks for joining us today, and we'll go ahead and get started. So Nathan, thanks for being co-host today. It's great to have you here, and I'll hand the presentation over to you for a little crop insurance in context.
Well, thanks, Megan. Hello, everybody. And I really appreciate being involved in this webinar on behalf of California FarmLink. Thanks to the co-presenters as well as from the audience, and hoping to help create a really robust information session, but also some conversation about these products. So California FarmLink, if you don't know, is a nonprofit working to link independent farmers and ranchers to the land and financing they need for a sustainable future. We have staff here in the central coast of California, the Central Valley, up near Sacramento, Yolo, and Grass Valley area, as well as the North Coast, across about 20 counties in California. And we provide capital access through a nonprofit loan fund, as well as land access and tenure through technical assistance and business assistance. So I think it's safe to say that FarmLink is very interested in farm risk. And we spend pretty much day-to-day working through our capital products to help small and beginning and organic farms stabilize and manage their own risk, and also accessing land and helping with, in some cases, retiring farmers with succession. So you might think, what the heck is risk on my farm? It's a pretty broad term. And what I like to do is turn that question around and think, what is it that you value on your farm? What aspects or assets now or in the future would you want to protect? It could be aspects of where you sell your farm or where you're farming, the kinds of crops that you're growing, the labor force that you're working with to bring those crops to market. And by asking these questions, not just now, but where your business wants to go, we can look at different kinds of risk management strategies. Today, we'll be talking about crop insurance. Crop insurance is one of a suite of things that allows a farm, especially a small farm in California, to manage risk, looking at things like crop and livestock damage, what sorts of property damage you could be thinking about on your particular operation. Do you have customers and guests that come and visit your farm? Are you concerned about labor and whether your workers are safe, or your own safety as a farm operator, as well as the main source of labor on a small farm? These are all the questions that we want to ask ourselves. Today is about crop insurance, but it is one of a myriad of tools that farms and small organic farms across California can access as a way to manage risk. And so at FarmLink, we'd like to help. We're here to help and help farms understand how to look at that risk, not just with crop insurance, but across the board. And so really looking forward to today's discussion. Thanks again, Megan, and the speakers. And bring it back to Megan to introduce Catherine.
Yeah, so thanks for that overview and giving us a little context. So I want to move on with our first speaker. Catharine Anderson is a risk management specialist for the USDA Risk Management Agency Davis Regional Office. She has worked for the Risk Management Agency since 2005, and the regional programs she maintains include nursery, pecans, small grains, and the topic of today's presentation, the Whole Farm Revenue Protection Program. So Catharine, thank you for being with us today, and I'll hand the presentation over to you.
Thank you. So you just sort of told you all about me. We'll move right into the program. The Davis Regional Office, where I work at, we serve Arizona, California, Hawaii, Nevada, and Utah. And what our goal is to help agricultural producers with educational opportunities to achieve stability through risk management tools. And so there's a number of ways we do it. We do it with crop insurance, but we also provide funding to many NGO organizations to help them, like what FarmLink is doing today with you guys, to give you information about how to mitigate risk. Let's see. So Whole Farm is a program that we've had about 4 years ago. And the point of the Whole Farm is that it's made for highly diverse farms, farms with special commodities, and farms that sell to specialty markets, direct, regional, and farm identity preserve markets. So what does Whole Farm cover? It covers organic growers can insure their insurable crops with us, revenue from all commodities produced on the farm, which includes animals and animal products, commodities purchased for resale. It excludes timber, forest products, animals for sports, show, or pets. So no horses. And what it covers is the revenue produced in the insurance year. So a commodity grown last year and sold this year would not be covered. And the prices are used to value the commodities to be grown, must meet the expected value guidelines in the policy. So when you're figuring this out, you know, what does your crop, what's the expected value, you'll be looking at probably market prices in your area to come up with a reasonable price. And for commodities that grow each year, like cattle, only the growth for the insurance year counts. So if a calf was worth $800 at the beginning of the year and then he sold at the end of the year for $2,000, the value insured would be the difference, which would be $1,200. It also covers replant costs with approval, and then loss of revenue during the insurance year due to natural causes of loss that cause a decline in the market price during the insurance period. Also, when revenue to count for the insurance year is lower than the insured revenue, a loss payment may be made. And I'll give you an example at the end of the presentation of that. And then taxes must be filed for the insurance year before any claim can be made. So if you're in 2018, you would have to have filed your 2018 farm taxes before you're able to do your claim or before the claim can be settled. So that's probably the downside, because if you have, with some of the MPCI policies, if you have a loss right now, you would get paid pretty quick. But with whole farm, you have to wait until you've filed your taxes in order to get payment. And what does it cover? It covers natural causes of loss. So that's going to be adverse weather conditions, which here in California, that's pretty extensive. You know, it could be freeze, it could be lack of chilling hours, it could be a number of things. Insects, but not damage due to insufficient or improper application of pest control measures. And this is the same for if you're organic growers. So as long as the damage isn't because you didn't apply proper pest management for an organic farm, you would be covered. Plant disease with the same criteria. Earthquake and volcanic eruption, which we have some growers in Hawaii right now that are being affected, nursery. Failure of irrigation water supply if caused by an insured peril that occurs during the insurance period. And wildlife unless control measures have not been taken. And just one other, a decline, it's in our handbook, but I want to just share that a decline in local market price will be presumed to be from unavoidable natural causes unless FCIC specifically identifies a man-made cause that results in a measurable change in price. So what a man-made cause would be if there's a boycott, if there is if the prices get dropped from where you're bringing your product to and they're not accepting. So if it's a man-made cause, then we would not cover that. But if it's but we're assuming that it might be an insurable cause of loss is why the prices went down. So we take that road first. All farm revenue is insured together under one policy. Individual commodity losses are not considered. It's the overall farm revenue that determines the losses. And then premium subsidy is available and depends on farm diversification. So you can get coverage levels between 50 to 85% and 5% increments. To be eligible at the higher coverage level of 80 and 85, you're going to have 3 commodities. Potato farms must have 2 commodities. And commodities that are insurable with other revenue coverage MPCI products must have 2 commodities. So it must be purchased by the sales closing date in Arizona and California, February 28th, Nevada and Utah, March 15th, and late fiscal filers, which is a new option that we have now for all counties, is November 20th. When at the same time, you're going to provide your completed intended farm operation report for your farming entity. And for all insureds, the revised farm operation report is due July 15th, and the billing date is August 15th. Now, the only thing I want to mention that you want to remember is if you know that January 1st is when you have, when you're vulnerable, your farm might have has had issues in the past, you want to purchase your insurance 10 days prior so that you're covered. It's like anything, you want to have coverage prior to having an event. There's a 10-day waiting period. To qualify, you must be a U.S. citizen or resident, be eligible to receive federal benefits, and you have to file Schedule F or a substitute Schedule F that covers 100% of the farm operation. So you can't break out saying, I'll do this part and not this part. It has to be everything. And you must have tax returns for 5 years, consecutive years of the revenue. So here's the biggie. Controlled substances are not insurable under whole farm. Your farm operation will not be eligible for whole farm if you produce any controlled substance, regardless of the legal status of the substance in the state where you will be produced. So if you have, whether it's medicinal marijuana or it doesn't matter what kind that you grow, you cannot have whole farm. We have, for beginning farmers, we made changes, so a beginning farmer may qualify with 3 years of tax records. So what that would mean is if he wanted insurance in 2018, he would have had to file in 2014, 15, 16 for the producer to have, and he had to have been farming in 2017. And then also beginning farmers receive an extra 10% premium subsidy. And then coverage is available up to $8.5 million for all commodities produced on the farm, all under one policy. Producers with $1 million expected revenue from animal and animal products may qualify, and the same thing for nursery and greenhouse. So here's an example. So a grower has decided he wants 75% coverage level, and his approved revenue on his intended farm operation report is $101,225. So we take the coverage level of 75%, that gives you insured revenue of $75,919. So for this example, the following year, that year he had, his revenues account was 48,040. So his loss was 27,879. So what that cost him is the total premium was 6,529. But the USDA paid 80% of his subsidy. So his final premium for that 27,879 was $1,300. So what does it cost? It depends on the county, the number and diversity of your crops, and the types of crops insured. So you'll see there's a chart where if there's just a basic commodity, you'll see what the subsidy level is, as well as if you have 2 or 3 crops. So you can actually do some figuring and work with an agent to figure out where you would fall in that and how much it would actually cost you. So you purchase your crop insurance through an agent. So you're going to go to the RMA's website, and that's where you'll find an agent. There's a number of agents. Just so you know, all agents charge the same amount. None of them, regardless of who you go to for crop insurance, it's going to be the same fee. The only thing that might be different is how they service you, but everything is the same. If you need more information, you can find, this is our website, you can find the crop insurance agent. We have a cost estimator calculator where you can go on and plug in your information, and it'll give you a rough guesstimate of what it's going to cost you. And also, if you want to read more about the programs and policies, you can find information there. Questions?
All right, so Catherine, thank you for that overview of WFRP. And I just wanted to loop back around to let you know who's on the call. We have people calling in from all over California, Sonoma, Nevada, some folks from Stanford University. And then we also have our colleagues over at the Organic Farming Research Foundation are online. And then as for what people produce, we have some rice producers, jujube fruit, and some people that are working on carbon sequestration for the Marine Carbon Project. So we have a nice diverse crowd out there. And we've had some questions come in for you, Catherine. So someone was wondering whether the is the WFRP insurance only for organic crops or conventional crops covered as well?
Oh, it's definitely conventional crops. I had a grower a couple of years ago who had pistachios, and it was like in 2015 where we had a disaster with the non-chilling hours. It got really warm and then it didn't chill. So they had a pistachio policy as well as they had whole farm, and it turns out the whole farm, they collected more on that. So that's the one that they kind of went with.
Okay,
so
good.
It's meant for all crops. It is also in every county in the United States.
Okay, that's good to know. And then we had someone wondering that if you file your taxes but you don't use a Schedule F, can you still apply, or is the Schedule F required?
Yeah, you're going to have to create we have what we call a substitute Schedule F, so you'll have to create a substitute Schedule F. So if you don't do a normal Schedule F with your taxes, you'll have to create one.
Okay, but there's opportunities for people who might not have used Schedule F in the past.
Correct.
Great. And then there was someone who, with FSA programs, has received kind of financial assistance for their crop insurance. Is this something that WFRP does as well?
Okay, I didn't quite understand. You can't double dip. You know, you can't have.
No.
Oh, I'm not understanding what you're asking.
Okay, so I think for some of the programs through the Farm Service Agency, if you're a socially disadvantaged farmer, you get a reduced price on what you need to pay for the insurance, or you may not need to pay at all. We can ask Vivian that later in the presentation. The WFRP program have something similar for socially disadvantaged farmers?
It would mostly probably fall under the beginning farmer, which is the discount there.
Okay, great. And then someone was also wondering why potato growers have to have two commodities. Why is that kind of brought forward?
To be honest, I don't know. This was set up and I'm not quite sure the reasoning behind it. So I don't know, but I can find out. I wasn't involved in creating the program.
Okay, that's good. Thanks. So I think we're going to move on to the next presentation. But if you have additional questions for Catherine, feel free to send them in, and we'll get back to those. Yes.
Oh, Megan, I have one last thing to tell everyone I forgot to mention.
Okay.
Each county has a list of commodity codes of what a grower, where it counts how much subsidy they might get for commodity counts. So if you're in a county and you find out that we don't have your crop listed, and let's say you have a couple crops that would end up being in the category of other. Once you let us know, we can work on getting those crops added to that county for the following year so that you would be able to get your subsidy discount. Where that might happen is, let's say in Fresno, where there's a number of different vegetables, Asian vegetables down there. And once we know what people are growing, then we can get that separated out so that a grower could, let's say, get he would qualify for the 3-count subsidy rather than just one.
Okay, great. That's good to know. So thanks. We're going to move on to our next presenter. But again, if anybody has questions for Catherine, feel free to continue to write those in, and we'll have time at the end of the webinar for those. And Catherine, thank you again for your great overview of WFRP. So I'd like to introduce our next presenter. Freeman Barsati is a co-owner of KP Organic and Farm Fresh U with his brothers Noah Barnes and Thaddeus Barsati. He and Thaddeus are the company's co-CEOs. Freeman grew up on his family's farm northwest of Sacramento, the then 20-acre KP Organic. Today, KP Organics grows more than 130 varieties of fruits and vegetables on 500 acres of certified organic land. So Freeman, thank you very much for being here today. I know you're super busy running a farm and business, so we really appreciate the time you've taken to share your experience with the WFRP program.
Yeah, my pleasure. So welcome everybody, Freeman Barsati here. And I did the WFRP program in partnership with a farm last year. It was the first year that we did it. And so this is kind of my experience and feedback. There'll be a little bit of repeat that you've heard before, but this is just Freeman digesting his experience and putting it on 3 or 4 slides for y'all. In getting started, the things that really hit me is, one, if you're larger than about 15 million gross sales or so, it's not for you, right? Because it'll only cover 85%. You need your taxes Schedule Fs. That's what they're after. That's where all of your historical data comes from. As it was mentioned earlier, you can do a substitute Schedule F if you don't have it. But the historical yields, right? Okay, how many cases per acre did I get for peppers or sunflowers in this picture? How many did I get in the past years, and how many am I gonna get in the future? That's really important because you're essentially saying, hey, this is exactly what I think we'll be doing. You know, this many cases at this price, this acres, right? And that's what your insurance is for. You select the insurance, it's whole farm crop insurance. Look, I think I'm gonna make $10 million. I'm gonna pay a higher premium to get the 85% coverage. That's $8.5 million that they're guaranteeing that I get. Only if you get less than that can you actually have a claim. And there's 2 things they look at. One is, what do you think you're gonna grow? I said 10 million in this example. And 2, well, what did you actually do? I think it's 3 years, the last 3 years. So if you've only done 5 million on your Schedule Fs for the past 3 years, you can't go and have a 10 million gross sales next year. They're gonna use the lowest of the 2. So my big takeaways on what is important. This is kind of, okay, we've done it, we've gotten all of our data, we have the insurance, now we're in it. These 4 bullet points are what I took away. 1, communication, right? If you're like me and you have, and you probably are if you're looking at whole farm crop insurance, there's a lot of different crops, a lot of different acreages. It's not easy to keep track of all of this stuff. And, oh, well, I got 2 rows of peppers that look like crap. Or, you know, it got too hot, record heat and sunburn or something going on that's covered. You got to just take a picture, over communicate, keep that communication going to your broker. That's essential. Second bullet point, whole farm revenue production. It's not, you know, that to me makes me feel kind of like, well, I can't go wrong. Well, the reality is it's not whole farm revenue protection because it does not cover, as mentioned in earlier slides presentation, it does not cover market pricing. So let's not, we need to be very clear that this is covering, you know, acts of God, you know, pests that you're actively trying to manage, but it still took you out, or diseases that you're actively managing and it still took you out. But the reality is, if you just can't, if you have a great yield and you just can't get the price, well, that's not covered. So you very well may have, you know, not the revenue you were expecting and not be covered. This is really just protecting against covered causes that have been mentioned earlier. And, you know, there is a result, right? Well, sometimes it's not all or nothing if you have issues. Sometimes you have terrible heat wave and you have sub-quality stuff, and maybe that has now impacted your market price. That's, you know, something that you can talk to about and potentially could be covered. But it's not because of, you know, my tractor broke or I wasn't able to water because, you know, I didn't have enough pipes to handle the needs. That kind of stuff is not covered. So I think those are really important things to keep in mind. This is very much a crop insurance program that covers covered losses. It's not going to guarantee you a revenue just because the market pricing is poor or you're unable to sell something that yielded well. If there is a claim, then basically you have to have covered losses and be at 85% or less. That's the highest level you can go. You can get less levels, but you have to have your gross revenue be lower than that. It is important to kind of have a lot of, not a lot, but you need to be reasonable in terms of the data that you have to really explain what's going on. For farms like us, we are taking product and selling it maybe at farmers markets or putting value add to make sure it's sold. We don't do jam, but some people may use strawberries and you know, make it into jam. Well, all of these efforts to increase value, including, i.e., selling the product, that is actually backed out of the price. So if I sold 100 cases at $10 a piece at a farmer's market, but I spent $2 a case actually on the labor and the farmer's market work, well, your revenue is actually only $8. So you have to have the data so that you can back out your value add costs. You have to know your yields, right, by commodity. How many boxes of 24 count did I get from my peppers, from my tomatoes, or all of the things that you're covered. I don't want to scare anybody because there is a decent amount of that work, right? You have to know your historical numbers and you have to know your actual numbers for a claim, historical numbers just to get insured. But my experience was the group was extremely reasonable to work with. So if you think about farmers markets, you absolutely need to know what you sold, how many cases of what commodity you brought to the market, and how much revenue you brought in. But in our situation, we you know, there's no way to know, oh, this many dollars was the peppers and this many dollars was the tomatoes. But we were able to just, all the data went in. Let's say we made $500 at this market and we had 50 cases of mixed product. We can just take the revenue received at the market, back out the cost to actually grow at the, or sell at the market, the value add costs, and then that number divided by the 50 cases we took, that's our sales revenue we used per commodity. So I think reasonable assumptions work. But the reality is you absolutely need to know your money received for your commodities, how many, you know, your yield by commodity, and all of your expenses associated with growing, selling, and the documentation to back it up, right? So that's kind of a very brief overview of the key things, and I'd be happy to take questions.
All right, great, Freeman. Thank you very much for kind of pulling out all those nuances and sharing your experience. And it sounds like it was, you know, a lot of number crunching and, you know, filling out applications, but that overall that the people you worked with were good to work with, and you had a positive experience through that.
Absolutely.
So I wanted to open it up for questions for Freeman, so please feel free to send questions in. And we did get a bunch of other questions for Catherine, so I figured while we're waiting for questions for Freeman to come in, Catherine, we could ask you a couple more on the specifics of the WFRP.
Yeah, that sounds fine.
Okay, great. So someone was wondering, how is the approved revenue calculated? Is it net or gross income?
It's going to be, well, it's when you're figuring out your crops, it's going to be what your gross is at that point. You're figuring out, you know, let's see, I'm trying to think. I want to make sure I say this correctly. If you're going to be, when you do the intended farm operation report, you're going to say what you expect, what you produce, what you expected to get in your price, and what you're anticipating. So that at that point, that's your growth. But then, you know, you got to make sure, you know, this is based on tax records, so other things get backed out, like Freeman was saying. So your initial amount is, you know, what your price is that you're expecting. I also found out. Oh, I found out about the potato, about why there's 2 potatoes required on the potato question. It's a requirement that it's a requirement from the potato industry. They're the ones that asked for it.
Okay, well that's good to know. So it's interesting.
I have no idea why they required it, but they did.
Okay. Thanks. It's interesting to hear where those things come from sometimes. So that's good to know.
Catherine, Nathan Weller here. We have some questions coming in asking for some clarity around the notion of coverage of market price and maybe some confusion about what that term might mean. You could elaborate more on that, whether it's covering quote unquote market price.
Well, what they're looking at is, like, I think what Freeman kind of mentioned is that if you have a loss, you know, and what we have in our handbook, it says that the loss in the market price is going to have to become from a natural cause. So I gave you the list of those causes. It can't be that you just couldn't sell it because the prices just dropped, but there was nothing, it was not tied to anything. There was a man-made cause of loss, or there was a boycott, or there was a glut in the market. None of that would qualify as considered a loss. It would have to be because there was some kind of weather, maybe a weather-related event, something along that line.
From my, this is Freeman here.
Yeah.
From my perspective, when you do your insurance, you have to lay out, I'm expecting X cases of this product at this price. And so you're laying out everything that you think you're going to do next year, and with the price that you're expected to get. And that's how you get your gross revenue for the insured year, the next year's insurance. And you can modify it, you know, if you don't plant the right acres, there's 2 or 3 chances to modify it. But the fact is you're communicating the price you're expected to get. Let's say it's $24 for a 24 case kale. Well, if you just don't get $24 per case of kale because of other conditions that aren't weather / bug / whatever related, that's what I'm saying, you're not covered. So your expected crop year, you thought you were going to make $1 million, you only made 800,000, you had 85% coverage. You would think you would be covered, but if 500, you know, 50,000 of that wasn't covered just because you couldn't sell it, you had nobody to sell it to, but the yields were there, you know, that's going to mean that you actually only were going to make 950,000 and not be covered.
He's correct on that.
Okay, thanks for the clarification. I know that's been a confusing topic, and one of those things where things mean have different definitions in different contexts. So thanks for the clarification. And Freeman, you mentioned that there's a lot of kind of record keeping involved in this and having good records. Do you have any recommendations for farmers on kind of, keeping good records or to help apply for crop insurance?
We're fortunate enough to be in a software. We use Famous software, and we've had it historically for the years we needed. But I don't want to over-intimidate people on record keeping. I found the group to be totally reasonable. But you just have to, whether it be Excel or a database that you may have, you have to have some sort of logic in which you determine why you think the yields that you're going to get are going to be what you got. For us, we said, hey, we think we're going to get, X cases per acre on Romanesco, because the last 2 years we got X cases per acre, and that was sufficient.
Yeah, I want to share too that I was on the team that helped with the large claim that he was involved in, and I will say that his company had probably the best records we've ever seen, because he had really good supporting documentation for the last few years, and so what the prices he came up with were very reasonable. They weren't like way out in left field, and that's really what we're looking for, is that should you have a claim, can you support, reasonably, what your expectations were. So I will say that working with his company was the easiest, I think, a large claim I've ever worked on.
All right, thanks. That's good to hear. So someone also wrote in wondering if WFRP covers value-added products like cheese.
I will have to, I know that we have a category for, we have products. We do have separate categories for animal products. So cheese would probably be one of those, I would think, or milk products. So we do have animal products as a category.
Okay, good, thanks. And then another question, how does WFRP compare to standard crop insurance, such as Armstrong Insurance?
I don't know anything about Armstrong Insurance. I don't know who or what that is.
Okay. Maybe could you talk a little bit about how it differs from commodity insurance, like if you were an almond grower and you buy insurance?
Okay, the big difference is that for, let's say you're an almond grower, and you have a loss. Almonds is what we call an APH program, actual production history. So you're insuring exactly what you expect to produce. And the big difference between MPCI, which is multiple peril and crop insurance, is that you have a loss, and after everything's been settled, you get paid pretty quickly. With whole farm, it's based on your tax year. So you're not going to get paid until after you filed your taxes. So, which can be kind of difficult if you're a really small grower. Now, my understanding is that I've been told in the past that FarmLink has a program where if a grower knew that, please correct me if I'm wrong, but I think you have where a grower could get a farm loan, a temporary, if they have insurance, to hold them over until they get their payment. Is that correct, Nathan?
Yeah, in general, we have agreements with agencies that help to bridge some of that.
Yeah, bridge to loan. Yeah, that's what it's called.
Right.
But so the main difference is one is a specific crop only. Whole farm is everything on the farm. So that's really the biggest difference, is that you have everything on your farm. Also, this is a revenue-based program. A lot of our crops, we have some crops that are revenue-based, but most of them are, a lot of them are APH, production history crops. And I would say the biggest is when you get paid for a loss.
All right, thank you. So I think we're going to take one more question for Catherine and Freeman and then move on to our next presenter. But again, if we haven't gotten to your question yet or you have more questions, feel free to write in and we'll have lots of time at the end of the webinar for questions. So for the final question, someone wrote in wondering, what do you recommend for producers in their first 3 years of farming? Am I correct that these farms are not eligible for WFRP because they don't have sufficient tax history as a farmer?
Well, that's where we just shared that you need to have 3 years of tax history, but you can also create a substitute Schedule F for all 3 years. You just have to have 3 years of farming experience, consecutive. So even though they might not have filed taxes, they can create some substitute Schedule F for that purpose.
Okay, great, thanks. So kind of including, if you're including farming expenses in your taxes, even if it's not a Schedule F, that will help beginning farmers kind of apply for the program.
Yeah.
Good, so Catherine and Freeman, thank you again for your presentations, and we're going to move on to our next speaker. But again, if anybody has additional questions, feel free to write them in. So Vivian Soffa is the County Executive Director of the USDA Farm Service Agency office in Salinas, California, serving the Monterey, Santa Cruz, and San Mateo counties area. Much of her time has been spent on reaching out to farmers who have been historically underserved by the USDA. Vivian has also served as a board member for the Agriculture Land-Based Training Association and the California Small Farm Conference. So Vivian, thank you for being here with us this afternoon, and I will pass the presentation on to you.
All right, thank you. Hello, good afternoon, everyone. I'm Vivian, and I'm going to give you a very shortcut introduction to the Non-Insured Crop Disaster Assistance Program, known as NAP. That is administered by the Farm Service Agency, and this program is authorized by Congress. I think I moved my slide too fast, sorry about that. So NAP is another risk management tool. It provides financial assistance to producers of crops that are not insured by federal crop insurance. It is a program that protects against natural disasters that result in crop losses or prevented planting or lower yields. It does not cover market or price fluctuations, losses from those issues. And just a note on federal crop insurance is obtained through private insurance companies, and the premium is subsidized by the government. That's why it's called federal crop insurance. And for example, in Monterey County, there are probably less than 10 crops that are covered by crop insurance. So that's where NAP comes in and fills the gap for all those other crops. So NAP is not an entitlement program. It's a risk management tool. It does have a service fee that has to be paid at the time that the application for coverage is filed, and that is $250 per crop per county. Now there are maximums, a $750 maximum per county, and if you have multi-counties, the absolute maximum you pay for coverage is $1,875. And that does not come out to multiplying 750 by anything, so it's a statute limit. I don't really know how it got there. The fees are non-refundable. However, if you are a beginning farmer, a socially disadvantaged farmer, a limited resource farmer, basic NAP fees are waived. So I'll go over those definitions. A beginning farmer is someone who's farmed 10 years or less. A socially disadvantaged farmer are women, minorities, other groups that have not been historically served. A limited resource farmer, the example I'll give you is Monterey County for 2018, is somebody who meets two criteria: a gross farm sales of less than $174,600 a year, and a household income of less than $31,062 based in 15 and 16 years. There's a website with a tool where you can put in your data and determine if you meet the limited resource requirement, or we can help you do that. The maximum you can receive in the NAP program per person per year is $125,000, regardless of how much you lost. And there is a $900,000 adjusted gross income requirement, which means in the prior 3 years, based on the 3-year average, for example, in 2018, your adjusted average income cannot be more than $900,000 based on 14, 15, and 16. So we don't have a lot of people that exceed that amount. And eligible producers are basically anybody who has a risk in the crop. It could be through a share, you could be an owner, operator, tenant, anybody entitled to share in the crop, available for marketing in the unit that would have shared in the crop had the crop been produced. That means if you were prevented from planting the crop due to a natural disaster and you had a share crop arrangement, you would be entitled to your share. We do look at grower contracts, marketing agreements, and sharecropping agreements in this program to determine, number one, who has the risk and what share of the risk the participants have. And basic producer responsibilities, we have many forms, and one is the adjusted gross income form. I mentioned previously a farm operating plan that just lists how you're farming, and you must be in compliance with all the wetland and highly erodible land conservation provisions of the Farm Bill, which basically means we're not going to pay you if you're going to be farming land that's very highly erodible and you're losing a lot of topsoil, and you have to have a plan in place in order to get paid to the federal government. You have to you have to get the coverage by the NAP application closing date. You have to timely file a crop acreage report. If you have a notice of loss or a yield reduction, you have to file that timely. You turn in your production records, and you turn in your application for payment timely. This is more of a yield-based program, meaning we calculate everything based on a production loss as opposed to any kind of revenue loss. The eligible crops are any commercial agricultural crops for which catastrophic insurance or additional coverage is not available. Catastrophic just means the minimum level of coverage of insurance under federal crop insurance. So crops grown for food, crops grown for livestock consumption, that includes native grass. So if you're a livestock producer, you literally can insure your native grass against drought. Hay, forage crops, aquaculture, floriculture, ornamental nursery, and Christmas tree. And as Catherine said earlier, cannabis and other controlled substances are not an eligible crop yet. Coverage options. Now, there was recently a very big change to NAP, and we had different levels of coverage so that you can insure a higher percentage of loss on your crop, but those have been changed, and now we only are offering a basic level of coverage, which is based on a 50% production loss at 55% of the market price. So this really is catastrophic insurance. It's going to take a pretty big event for you to lose half of your production, and like I said, this is a big change. We had many other options 6 months ago. So it could change again in the future. And also we have an organic option available, which was not previously available. Now I want to just say the loss calculations, it isn't that you walk out and you lose half your crop and you're going to get paid, what you think half of your crop is worth. We take into account a lot of other factors, and a few of those are late planting of the crop, any non-eligible causes of loss, such as lack of labor, poor management practices, and no market for the crop. On the organic certified operations, we're getting more and more participation by our organic growers, and you must be certified with an accredited certifying agent and provide an acceptable organic system plan. Crops may not be certified without that plan on file. Organic yields and prices are used if they are available for any payment on your losses. And we do have exempt operations. If your operation gross is less than $5,000 a year from your organic crops, you do not have to be certified. However, you still are required to have an organic system plan. FSA requires that just to ensure that you're following all the provisions of organic laws. Another good option in NAP that we've added recently is a multiple planting period. So this is where the same crop is planted multiple times throughout the year. Previously, we would take all of your broccoli and include the whole year in all of our calculation, which means if you had a loss in the spring and a bumper crop in the fall, you'd never get paid. So now we have two planting periods that are separate and distinct from each other, basically a spring planting period and a fall planting period. Each planting period is counted as a separate crop, and each planting period requires a separate service fee. And production records also have to be kept separate, which is not an easy process. We're working on that to make it easier for you to file those documents. The potential benefit of the multiple planting periods is that each planting period can be looked at separately. So if you have a higher risk in the spring, then you can just get coverage for your spring period. If you have problems in both, you can insure both of them. And in this county, the two planting periods are planting period 1 are all crops planted between September 1st and February 28th. Planting period 2 are all crops planted between March 1 and August 31. And planting periods vary by county. So if you're in another county, if they do have them, you'll need to contact that FSA office and make sure that you understand their planting periods. In Monterey County, the eligible crops right now for multiple planting are broccoli, cabbage, carrots, cauliflower, cucumbers, annual herbs, onions, lettuce, peas, and squash. If crops can be added at any time, we didn't list all the crops in Monterey County because there are so many, and not all of them are multi-planted crops. So if we accept producer requests, if a crop needs to be added, we've added several crops based on producer requests. So on the multiple planting periods, you can get coverage for both periods, but the deadline to purchase the coverage for both periods is September 1. Regardless, if you're going to only buy one planting period, you still have to purchase the coverage by September 1. We haven't had a lot of use of the multiple planting periods. To date, we've had a little bit, but not a lot. I think further south of Monterey County, they've had more experience with the multiple planting periods. A lot of it's because of the, very mild climate we have here. So some of the dates, it's all about dates with the NAP program. First thing you need to do is purchase the coverage by the NAP closing date. There are late filed provisions for NAP. If it's over 30 days, it becomes a little more restrictive trying to get the coverage, but you can file late. It only hurts you when you file late because coverage does not attach until 30 days after you filed if you're approved for the late file. So you can always contact us to try to make sure that you're filing on time. The crop acreage report has to be filed by the applicable deadline, and there's a lot of different deadlines for the various crops. I just recommend you utilize FSA staff to help you with those deadlines. If you do have a notice of loss and it is a hand harvested crop, which are most everything in our county except for the forage crops, you are required to notify the county office within 72 hours of the loss. It can be a phone call and then followed up with a more formal loss program loss form. This is to allow an inspector, a loss adjuster, to come out and verify the crop damage. You also have to, at the end of your harvest period, file your production records and an application for payment if you want to get paid. And then, of course, all other eligibility forms that are required that we talked about earlier. The application for coverage dates, we actually have about 9 of them in California. And as of the date of when we were preparing for this webinar, the 2019 dates were not out yet, and they just released those. So these are the 4 of the really main dates, and any FSA office can give you the actual dates, closing dates of all crops in the state. And then a couple of things I just want to talk about, in summary. NAP covers production losses, not market fluctuation losses, and losses have to be due to adverse weather. NAP can also cover disease or insect damage if it can be directly related to adverse weather, and it usually takes a second party opinion of that, such as a farm advisor, cooperative extension person, to make that determination. It is a very inexpensive risk management tool, particularly for high value crops and forage. For example, you can insure your 50 acres of strawberries for $250. And if you are a female or a minority grower, you can insure that for free. So it's really the inconvenience of filing the paperwork that could potentially protect you from a catastrophic event. If you are a cattle grower, cattle livestock producer, and you have 5,000 acres of native forage that you graze your cattle on, you can insure that for $250 a year against drought. So I think overall it has paid off, but if you have a lot of crops, if you have 20 crops and you're planting all the time, I will be honest with you, there's quite a bit of paperwork in order to keep NAP filed timely on that many crops. And a farmer and rancher, you really just have to be engaged with FSA. It's a very complex program. There's a lot of forms, and my recommendation is hard to navigate it, so you utilize the experienced FSA staff to help you with the dates, the record keeping. I mean, phone calls can do wonders on just getting a date. Something's required to be filed if you've forgotten, because we do have a lot of different dates now. The other item is the new Farm Bill is in the process of being developed right now and could change coverage levels under NAP, where we go back to the higher coverage levels. And we have wanted to make sure everyone knew we do have bilingual Spanish assistance in our office to help with the program or answer questions about the program. And we can also provide you your local FSA office contact in your county if you're interested in the program. And I think that's about it.
Great, thank you very much for that overview and kind of advice to growers as they're looking to apply. So I want to open up the questions for Vivian. And we did get a couple that came in during your presentation. So someone was wondering what counts as available organic yields and prices?
So on the NAP program, we keep individual yields. So as you come in each year and file your production and your acreage report, we start establishing a yield for you. The prices of organic that we use are determined by we have a state office, and a national crop table, and they use generally like 5 years of production, and they in the county, and they take I believe they take an Olympic average to get an average for that county for that crop. The state uses a couple different methods to determine prices and yields for organic crops. I think if there's available data, they use it. If not, they use Risk Management Agency crop insurance numbers, generally speaking.
Great, thank you. And then someone was also wondering, are there multiple planting periods available in certain states, and which ones? So is it outside of California? Are there multiple planting periods available?
I would guess that there are, but I don't know which states and counties there are. I can only account for California. I mean, we can find out if you have a specific county in mind.
Okay, thanks. So maybe we can follow up with that later, or if you're the one that asked that question, if you could write in what state and county that you're looking for. And then we'll open it up to questions for everybody, and there's just a couple questions sort of on the difference between WFRP and NAP and kind of how they fit together. And someone was wondering, WFRP can fill the gaps. NAP is limited coverage relative to WFRP, so why would you want to do both or one over the other? So Vivian, we can start with you.
Well, I would say the first thing that kind of stands out to me is if you are have a lot of small, diverse crops, if you have a number of crops, I think, the whole farm revenue looks at everything much more comprehensively than NAP. In NAP, you have to decide if you want to insure. If you have 20 crops, you can insure them all, but it's very, very difficult to keep up with the reporting requirements when you do that. So a lot of people will just maybe get coverage on their most valuable crops because they want to make sure they have that catastrophic coverage. So I guess first is, the diversity and amount of crops that you farm would be a factor. Also your location. In Monterey County, we don't have a lot of adverse weather, with the exception maybe of drought and heat in the south part of our county, but we don't get the extreme freezes like some areas, maybe more inland in Northern California have. So, you can think about, if you don't want to pay the higher premiums for the revenue program, you can think about some of the crops that you just really want to make sure you have coverage on and maybe make a choice that way. I don't know if Catherine wants to add to that.
Yeah, I would agree with her. And the other thing to think about is with NAP, it's 55%. With whole farm, you can go up to, depending on how many commodities, up to 80, 85%. So you really need to look at your area and what kind of risks do you have. Especially weather related. If you're in a fairly temperate area where things don't change that much, and if you go from year to year and you don't have that many losses, then maybe SNAP would be a better choice than taking out whole farms.
Great, thanks. And then just kind of a clarification too over where that you purchase the different insurances. It sounds like for FSA, you go through the FSA office and purchase through them. And for WFRP, you go through a private insurance provider, but it's the USDA that's subsidizing the cost of that.
The premium, correct.
Yeah, that's correct. Yep.
Okay, great. Thank you. And then we had another question that what happens for an organic grower that transitions to organic? And if there's kind of a price increase that they experience during the course of the year, how would you factor that into the application? And Vivian, why don't we start with you?
So I believe we'd look at transitional acreage similarly to organic. So we would, yeah, I think I'd have to look, but I think we do count transitional as more of an organic yield and price.
Great, thanks. Catherine, do you have anything to add to that?
Well, and with whole farms, you're still, even though you might have higher prices, you know, you're transitioning, they wouldn't, you're looking at the lower of, you know, your yield. So, I mean, or your dollar amount. So it really wouldn't, at that point, have a significant factor starting out.
Great, thank you. So we had someone that wrote in that's a mixed vegetable grower who lost a lot of her tomato crop last year due to flooding. And so she's been looking for insurance options so that if that happens again, she'll be covered. And she was told that tomatoes weren't available for crop insurance. So I was wondering if both Catherine and Vivian, do you have any advice for her on where she could purchase or what program would work best for her?
So if tomatoes are not an insurable crop in the county that she grows in, then she can apply for NAP in that county.
Okay, that's good to know.
Okay, and with MPCI policy, depending on whether it's fresh tomatoes or processing, if it's not available in her county, it's possible that she could get a written agreement where she'd be tagged in under another county that has similar growing conditions and yields and stuff.
Okay, so who would be a good person for her to talk to? Would a crop insurance salesperson kind of know how to navigate that?
Correct.
All right, great, thank you. Then we had another question asking for both programs if a majority of the corporation is held by U.S. citizens, but there are some non-citizen residents that own a minority share. Can the corporation still qualify for NAP or WFRP? Catherine, why don't we start with you?
I don't believe so because everyone, they have to be a U.S. citizen. So it depends if they have if they're part of if they have a part in the company, everyone that's a part of it needs to be a U.S. citizen. So I'm not sure, they would need to talk to an agent in their particular case, depends on how their company is structured, but I kind of don't think so. But I don't quote me on that. I'd have to check on that a little bit more. Depends on.
Okay.
Yeah, depends on the structure of the company and what role they play.
Sounds good. So they'd need to do a little more investigation on that. And Vivian, how about you?
So I believe they can get paid under NAP. It's just the non-eligible members would not, their share would not get paid. So.
Okay.
Yeah.
Great. Thank you. So we have another question about a person who kind of has a question about a deer fencing scenario. That imagine a farm has deer fencing and has maintained their field so that there aren't branches overhanging the field. Randomly, a whole bunch of birds land on the field, strawberry plants, and left scat all over much of the field, leaving the field unharvestable due to food safety risks. Would this be covered under WFRP as wildlife intrusion?
It possibly could be. You know, I think the key thing is, have they done everything they can that's considered within reason to stop that from happening?
Great, thanks. And then for whole farm, how does an organic farmer prove that they have done sufficient or proper pest control measures? That seems like an area where organic growers can be disadvantaged depending on who's evaluating the insurance claim.
I know that within organic plans, first of all, they have an organic plan that they have to adhere to. And I know there's, was it NCAT, National, I'm trying to think, it's Rex DeFore, his group were, and there are standards for different crops, what are considered standard practices for pest control. And so they would have to prove that they just didn't, you know, their methodology is not something that they just created themselves. That, you know, they have to have substantial backing in how they're supposed to handle pest control or irrigation or, you know, any of that within their organic plan.
All right, thanks. So it's sort of recorded how they're supposed to be managing that, and if it fell outside of that, then that would kind of serve as
yeah, we call it a good farming practice. So are they instituting good farming practices for their crop, whether it's conventional or it's organic? And there are standards that are out there within California. One place you can always check is at the University of Extension offices. They have information for each of those crops, organic practices.
Great. Thanks. So I think we're gonna wrap things up. So thank you again to all of our presenters. As I mentioned before, I know you have lots of things going on, and we really appreciate you taking the time to be here today. And so thanks again. And if you have additional questions that you'd like to follow up with, you can send them to Nathan or I, and Vivian also provided her contact information, so feel free to follow up with her. And thanks for everybody for participating. So we're just going to do a little more wrap up. I just wanted to note, as Vivian mentioned, NAP and WFRP are funded through the Farm Bill. And there are a lot of organizations doing work to promote crop insurance options for organic and diversified farms, as well as do education outreach for them. And I just listed a couple here. There's a lot more. So the National Sustainable Agriculture Coalition, the Organic Farming Research Foundation, and the National Center for Appropriate Technology. And I know OFRF is doing more outreach this fall on NAP. So if you have more questions about that or looking for more resources, you can look to them. And just a couple other additional resources, the organic pages for RMA and FSA, and then a couple more places you can get resources on insurance. Farm Commons has a lot of great resources on insurance in general, including crop insurance. And just to note that the CCOF Foundation offers the Brickmont Hardship Assistance Fund that provides direct financial assistance to organic producers that have experienced hardship. So if you're a grower and you've had some hardship happen over the past year, please apply, or if you know a farmer, please point them into the direction of our fund. The application deadline for this year is December 3rd. And as I mentioned at the beginning of the webinar, this is a 4-part series. So we have a couple webinars coming up in August and September on organic record keeping. They'll go into a lot of the details of, you know, what records you need to use for organic record keeping, as well as tools available to help you do that. As we kind of saw here today, having good records also helps with applying for crop insurance and a lot of other things. So before we sign off, Nathan, do you have anything else you'd like to add?
No, thanks, Megan, and speakers as well on behalf of the webinar and FarmLink. And I think something that we're observing at FarmLink and the nonprofit side of service provision is some of the complexities of these programs. Some of them are not so old, haven't been around for a long time, and it's good to get a lot of the questions coming in from the webinar. We'll take stock in a lot of that, seeing what farmers are confronting with these different kinds of programs, understanding as Catherine, I believe, mentioned, that we are in a Farm Bill cycle. Some of those organizations, especially the National Sustainable Ag Coalition, are following the nuances of crop insurance and how sometimes these programs can relate. For example, I know that there is efforts to create on-ramps between NAP and WFRP to help, especially the small sustainable producers, get a leg up on these programs as we see them being implemented. And so thanks again for participating today, and I learned a lot from some of the questions and from the speakers, and we'll see you next time.
Yes, thanks. And I definitely agree. Learned a whole lot during the webinar, and there's a lot more to learn too. So thanks again. As you close out of the webinar, the evaluation form will pop up, and we'd love to hear your feedback. It helps us get ideas for additional webinars and events, as well as improve our offerings. So please send your feedback, and thank you, and have a great afternoon.
Thank you.
Thank you.